Hello, good evening. It's Adil Fazal here, market analyst at CFDs.com, bringing you a review of the European markets for trading the Thursday, the 28th of January 2016. Okay, let's try and decipher these markets. Now, be sure to visit CFDs.com for your trading needs, the products and services that are on offer, and also the potential bonus offer as well. That certainly will be enticing for traders existing and new. Alternatively, visit the educational site to certainly learn more, which is at cfds.com and cfds.education. Okay, now let's try and cover the European markets, given the fact that the European markets were certainly under pressure today to a large extent, especially towards the close. But initially, the markets rallied. We had a FTSE up by 1.3%, the German DAX, the CAC as well. Although all those gains have evaporated overnight, given the fact that the Fed left rates unchanged, and the markets certainly have interpreted that as being bearish. Basically, the Fed wasn't as dovish as enough. But we'll certainly go into that and see if we can decipher that. Okay. In terms of the FTSE itself, or in terms of European indices, the backdrop remains easier monetary policy, dovish monetary policy. You have the draghi put, you have the Carney put, and the markets certainly remain well bid. Also, given the fact that oil certainly had a stellar rally as well, everything certainly, from my perspective, certainly seems bullish, and that's the way to interpret things. Now, the Asian markets, we have the Shanghai now potentially putting in a bottoming tail on the Shanghai index, and therefore you are looking at potential gap fills above. On the weekly chart, you can see the 200 MA certainly seems to be holding so far, and you are looking for a potential rally, especially given the fact that the Fed certainly had a dovish hint towards, well, yes, certainly dovish, given the fact that they are concerned about international, obviously, basically growth concerns, and also given the fact that you have concerns from China as well. The Nikkei itself on the daily chart, you can see here we've certainly pushed higher. A weekly chart, you've put in two doji candles now, so certainly a potential bottom put in here. We talk of obviously further BOJ stimulus. Now, while we're talking about BOJ, we certainly have the BOJ active, and they will certainly dictate the market price action. Now, given the fact that it's a Thursday evening, again, that's going to be very, very important in terms of the retail sales data. Certainly has come out from Japan, and certainly is weak retail trade. So again, that certainly adds to the argument of further QE in Japan, and therefore weaker yen, and therefore sending obviously markets higher. That's the interpretation thus far. So the Nikkei and the Shanghai certainly showing indications of potential bottom and support, and therefore you are looking for higher prices. Now, in terms of the economic data that came out today, we had consumer confidence in Germany certainly stronger than expected, although the growth certainly was downgraded, and potential forecast for future growth certainly was downgraded as well. Also, the export picture was certainly downgraded, so again, that is a cause for concern. In terms of the US, housing data certainly came out better than expected, so that certainly supported the equity market to a large extent until we had the Fed statement, and everything reversed subsequently. So the situation with regards to the Euro stocks, first of all, from a technical perspective, remains bullish. We've broken out this bearish channel, and we're looking to potentially close that gap at 3070. So all eyes on 3070. 60-minute has an inverted head and shoulders target of 3115, and therefore bias remains bullish. Okay, on the actual index itself. Now, on the 10-minute chart, given the fact that we are now currently trading around 3000, 3000 certainly is a very, very solid support level down below. So again, all eyes on 3000 with regards to the actual market itself. The Europe, S&P Europe 350 certainly remains bullish. We've broken down the downtrend, and therefore looking to potentially move higher. The German DAX again looking bullish. We are looking to potentially close that gap at 9960, so all eyes on there. The 60-minute chart, German DAX again certainly remains bullish, and again indicating a potential thrust and a move higher. So all indicating inverted head and shoulders formations. Now, left shoulder potentially here, obviously looking to potentially consolidate here and looking to move higher. So all eyes on that gap fill support at 9960 zone. So keep an eye out for that. Okay, so given the fact that we did close around the 9880 level, so we are going to remain focused on there, and we're looking for gap fill at 9960. Okay, further gap is at 10200. So again, all eyes on there, and then we have a further gap at 10700 just above. So all eyes on the German DAX. Okay, in terms of the actual indices, the French CAC certainly pushing higher. Daily chart, you can see here, bullish gap. We have gap fill at 4390, then we have gap fill at 4480. So they're the two zones that we are potentially looking at, and looking to potentially thrust higher on the French CAC. Okay, so given the fact that we did have job seekers data come out much higher than expected in France, again that did put downward pressure on the actual index itself, and you are looking at gap fill potential support, and then obviously 200 MA at 4400. So the 4400 zone certainly remains a tough resistance zone. Now on the chart itself, on the French CAC, it's currently trading at 4300, so bear that in mind. The French CAC currently trades at 4300, so the French CAC will be quite important in terms of the actual index itself. So given the fact that we're down now to 4300 is a zone that we are looking at in terms of potential support, and looking for a potential bounce at the 4300 region on the French CAC. So all eyes on the French CAC and the actual potential move higher. So again, gap fill will be resistance initially, and then the next gap is at 4480. So they are the two zones that you'll be looking at. But with regards to the French CAC, you are looking at potential support at 4320, and you do have support at 4300 as well. Okay, now the FTSE 100, let's just quickly recap that. Now the daily chart on the FTSE itself, you are looking at potential resistance at 6015. Then the next resistance you're looking at is 6030. So they are the two zones that you are looking at in terms of the FTSE. Now the 60-minute chart has an inverted head and shoulders, and we are potentially retesting that 5920 zone on the FTSE itself, and therefore looking to propel higher. The oil price news, or the oil price data itself, in terms of the news flow, you are looking at Russia potentially cutting the price of oil, or the supply of oil, and therefore that's helping oil, and therefore that's helping the FTSE 100 index certainly move higher. Currently trading at the 5925 region at present, given the fact that we were as high as 6030 overnight, so therefore you are looking at a potential retest of that neckline on the FTSE 100. Looking at the 10-minute chart, again you have support at 5920, which is previous resistance equals support. If that were to fail, then you are looking at retesting that 5890 support on the FTSE 100. Okay, again FTSE remains bullish from my perspective, and you have an inverted head and shoulders target at 6190. So certainly bear that in mind. But with regards to interim resistance, there is resistance at the 6020, 6030, and then you're looking at 6080, and then obviously looking at 6160, which is previous resistance. So again, they are the zones that we are going to be watching out for. Okay, so target 6190 on the IHS formation on the FTSE itself. So again, helped by oil, helped by Carney being dovish, and if China can potentially put in that bottom on the weekly chart that we can observe, on the daily chart we've got a bottoming tail. If China can make a powerful thrust higher overnight, okay, therefore you are going to help the FTSE certainly improve in its gains as well. Okay, so that's certainly something, some food for thought with regards to the actual index itself. Okay, in terms of the dollar index, let's have a look and assess the damage that's been done post-Fed. We did have this HNS formation that certainly failed to play out as of yet. Certainly have a sideways consolidation date, although after the Fed, or since the Fed, basically we've had gyrations, but certainly holding resistance for now in terms of the Fed. Now, given the fact that they were concerned about for international concerns, i.e. China, okay, that certainly is a potential dovish slant, and that should send the dollar chart itself lower from my perspective, especially given the fact that we failed to take out that pivot high. So from my perspective, you are still looking at a breakdown, and you are looking at potentially failing previous resistance equals support, and then the dollar will certainly be in for a sharp drop. So certainly bear that in take that into consideration with regards to your trading. Okay, certainly some food for thought there. Okay, Euro USD, this is an important chart from my perspective, given the fact that the 10-minute chart has held at double top resistance at 1.0912, and therefore that's indicating risk on, and you should expect the indices to certainly potentially push higher. So certainly take that into consideration with regards to your trading. Okay, I think that's a market wrap in terms of European indices. So with regards to the FTSE, just to conclude, you are looking at a potential retest of the neckline on at the 5920 level. So therefore you are looking at that being solid support, and that should send the FTSE 100 higher. Okay, so bear that in mind. Inverted head and shoulders. If that 5920 were to go, then that would put a bearish slant on the rest of the actual European markets too. The German DAX is currently trading at 9750 after hours. given the fact that it was higher and much higher than that during market hours. It closed at 9880, so you are down 130 points. That's certainly something to consider as well. Having said that, just before I do finish, I do need to share a chart with you on the Nasdaq, given the fact that we've closed that gap as well. The daily chart has an inverted head and shoulders formation, and the right shoulder has held at 50 to 61% support, and therefore you are looking at a potential powerful thrust higher to the gaps above. Okay, so again, that's indicating a move higher as well. So certainly interesting scenario, and the Nasdaq certainly is putting in a potential bullish formation, which again is confirmed via the actual European markets, and therefore you are looking at a potential thrust higher. Okay, right, I think that's a market wrap now. So be sure to visit cfds.com for your trading needs, and certainly apply for that potential bonus. Goodbye now.